Something unusual is happening in the silver market right now. And if you're not paying attention, you might completely miss what comes next. Because silver just surged to nearly $76, $77 per ounce after a sudden global shift. And then within hours, it pulled back and froze near 74. That kind of move, followed by hesitation, is not normal behavior. It doesn't happen randomly. It usually means the market is trying to price something that hasn't fully happened yet. Now here's what triggered everything. A temporary 2-week ceasefire between the United States and Iran was suddenly announced after weeks of escalating conflict that had already disrupted global energy markets and pushed inflation fears higher. Okay? Immediately, markets reacted. Oil dropped sharply at first. The US dollar weakened. Bond yields started adjusting. And silver? Silver surged more than 5% in a single session, hitting around 76.70, its highest level in weeks. But then something changed. And this is where you need to pay attention. Don't ignore this. Within less than 24 hours, the entire momentum slowed. Silver gave back most of its gains and settled back near $73, $74 range. At the same time, global markets started showing hesitation. Oil prices, which had initially dropped, suddenly started rising again toward $98 per barrel as doubts emerged about whether the ceasefire would actually hold. Stock markets turned volatile, shipping costs surged, and institutions began warning about instability. Even the Bank of England acknowledged this directly. Its governor stated that global markets are now operating in a state of very volatile conditions following a major shock. Pause for a second, because this changes everything. This is no longer just about silver. This is about volatility entering the system again. And when volatility increases, assets like silver don't move randomly. They respond to 3 key forces: inflation expectations, interest rate outlook, Federal Reserve policy, global liquidity conditions. Right now, all 3 are shifting at the same time. Let's break that down. First, inflation. The entire Iran conflict pushed oil prices higher, which increased global inflation pressure. And inflation matters because silver historically acts as a hedge against inflation. But here's the twist. If inflation rises too much, central banks like the Federal Reserve may keep interest rates higher for longer, and higher interest rates reduce the attractiveness of non-yielding assets like silver. So now you have a conflict. Inflation supports silver. Interest rates suppress silver. Second, liquidity. When the ceasefire was announced, markets assumed liquidity would improve. Lower oil, lower inflation, easier monetary policy. That's why silver surged, but now that assumption is breaking because the ceasefire is not stable. Reports already show continued military activity in the region, strikes in Lebanon, ongoing threats from both sides, limited movement in the Strait of Hormuz. Even shipping activity remains restricted, with only a handful of vessels moving through key routes. That means supply chains are still at risk, energy flows are still uncertain, and inflation pressure may not go away. Third, interest rates. This is where things get even more important. According to recent signals from the Federal Reserve, policymakers are still concerned about inflation staying above their target. In fact, some officials have suggested that rate hikes could still be needed if inflation does not come down. Now think about that. If rates stay higher, liquidity tightens. If liquidity tightens, speculative assets struggle. And silver sits right in the middle of this tension. This is why silver is not trending strongly right now. It's not weak. It's not strong. It's conflicted. And that's exactly what you're seeing in the price. A tight range, low conviction, high uncertainty. But here's the part most people are missing. This sideways movement is not stability. It's compression. And historically, when silver compresses like this during periods of geopolitical uncertainty and shifting monetary policy, it doesn't stay quiet for long. It expands. And when it does, the move is usually aggressive. So the real question is not, why is silver stuck? The real question is, what is the market waiting for right now? Because something is about to resolve. And when it does, silver will not stay at $74. It will choose a direction. Now let's go deeper. Because what you're seeing in silver right now is not just a reaction. It's a signal behind the headlines, behind the ceasefire, behind the short-term price moves. Something much bigger is unfolding. And this is where most people stop paying attention. That's the mistake. Because while markets are reacting to the ceasefire, institutions are reacting to something else entirely. Let's start here. Right now, Global markets are operating under one condition: uncertainty. Even after the ceasefire, oil prices have already started rising again toward $98 per barrel as traders question whether this deal will actually hold. Think about that. A ceasefire was supposed to calm markets, but instead it created doubt. And when doubt enters the system, volatility follows. Even the Bank of England has acknowledged this directly. They've warned that markets are now in a very volatile phase after a major shock. Pause here, because volatility is not just a word, it's a mechanism. Volatility means prices move faster, liquidity becomes uneven, risk spreads across markets, and silver is extremely sensitive to all three. That's why you're seeing this hesitation. But here's what most people are missing. While traders are reacting, countries are positioning. China's not reacting, it's calculating. Right now, China is playing a very specific role in this situation, not loudly, not visibly, but strategically. China has already positioned itself as a mediator in the Iran conflict, actively communicating with all sides to stabilize the region. But that's just the surface, because China's real interest is not peace, it's stability. Why? Because China depends heavily on energy imports and uninterrupted global trade flows. And here's where it connects back to silver. When energy markets become unstable, industrial metals become critical. Silver is not just a precious metal. It's a strategic asset used in solar infrastructure, electronics, military technology, high-efficiency manufacturing. So when global instability increases, countries don't just buy oil. They secure resources, and that includes silver. Now combine that with another reality. The supply problem is not solved. The Iran conflict didn't just create headlines. It disrupted one of the most important choke points in the world. The Strait of Hormuz. Nearly 20% of global oil supply flows through that region. When that supply is threatened, everything downstream is affected. Energy costs rise, production slows, logistics break, and eventually, industrial metals feel the pressure. That's why even now, despite the ceasefire, shipping costs are rising again, tanker rates are jumping, and global supply chains are still unstable. This is not a normal recovery. This is a fragile system trying to stabilize. Now look at the data. Silver is currently trading around $74 per ounce after pulling back from highs near 77.6. And more importantly, it's stuck in a very tight range, 73.5 to 74.5. That tells you something critical. The market is not confident. Because if it was, you would see direction. Instead, you see hesitation. And hesitation in financial markets usually means one thing: a decision is coming. Let's connect this to the Federal Reserve. Right now, investors are not just watching geopolitics. They are watching policy. Because inflation is still elevated. Oil volatility is feeding into inflation expectations, and inflation is the single biggest variable controlling monetary policy. The Federal Reserve has already indicated that it may keep interest rates higher, or even raise them again, if inflation doesn't fall back toward the 2% target. Now think about what that means. If rates stay high, liquidity tightens, borrowing becomes expensive, speculative demand weakens, and silver depends heavily on liquidity flows, so now you have a conflict. Geopolitics pushing silver higher, monetary policy pushing silver lower. That's why price is stuck, not because nothing is happening, but because too much is happening at once. And here's the critical insight: silver is not lagging. It's absorbing information. Markets often move in phases. It starts shock, reaction, consolidation, expansion. Right now, silver is in phase 3, consolidation. And historically, this phase doesn't last long because once the market decides, it moves fast. Curiosity hook. So here's what you need to ask yourself. If oil is rising again and inflation fears are returning, why is silver not already breaking higher? Because someone is still holding back. Curiosity hook. And more importantly, what happens if the ceasefire collapses this weekend? Because based on current positioning, that reaction may not be gradual. It could be immediate. Visual build, live market feel. Picture this. It's early morning in global markets. News hits the screens. Ceasefire agreed. Markets spike. Silver jumps. Momentum builds. Then new reports come in, oil rising again, tensions returning, and suddenly everything slows. Orders disappear, traders pause, Now charts flatten, volume drops, and silver just sits there, waiting. Urgency repeat. This is happening right now, not later, not next month, this weekend. Before Monday, the next development could hit. And when it does, silver will not stay at $74. It will move fast. Part 2, end cliffhanger. So here's where we are. The market doesn't trust the ceasefire. Inflation is not under control. Central banks are not done. And global power is shifting quietly in the background. Silver is sitting right in the middle of all of it. Compressed, waiting, also building pressure. And when that pressure releases, the move could define the next phase of the market. The only question is which trigger comes first. Now let's bring everything together. Because at this point, this is no longer just analysis. This is positioning. Right now, the silver market is sitting at a critical level, around $74 per ounce. After touching highs near 77.6 just hours earlier, that range is not random. It represents a battle. On one side, you have geopolitical risk. On the other, you have monetary pressure. And in the middle, silver. Let's break this down clearly. Scenario 1, the breakout. If the ceasefire weakens or completely collapses, the entire system shifts again because the underlying conflict is not resolved. Even today, there are already reports of continued strikes in Lebanon and accusations of ceasefire violations. That means risk is still active, not removed. Now combine that with energy markets. Oil prices are already moving back toward $98 per barrel as confidence in the ceasefire fades, and this is where it becomes critical. Higher oil prices, higher inflation expectations, higher cost of production, higher pressure on global economies. This is exactly how the 2026 energy crisis began. When the Strait of Hormuz was disrupted, it triggered one of the largest global supply shocks in recent history. And when energy shocks happen, precious metals historically respond, not instantly, but aggressively, because they act as protection against uncertainty. So if this situation escalates again, silver may not move slowly. It could break above $78, then test 80 plus levels, and that move could happen faster than most people expect. Scenario 2, the pullback. But there's another side to this. If the ceasefire actually holds, even temporarily, markets will shift again. Risk sentiment improves, energy stabilizes, inflation expectations cool, and most importantly, central banks regain control. Right now, the Federal Reserve is watching inflation very closely. Markets are already reducing expectations of rate cuts and even pricing in the possibility of further tightening. That matters because higher interest rates reduce liquidity, strengthen the dollar, and pressure non-yielding assets like silver. So if inflation stabilizes and policy remains tight, silver could retest lower levels near $72. Not a crash, not a collapse, just a reset. What smart money may be doing now, here's the part most people don't see. Markets are not just reacting to news. They are positioning ahead of outcomes. Right now, you're seeing something very specific. Silver is not breaking down, even after profit taking. That tells you something. It suggests that larger participants may still be holding positions, not exiting completely, because structurally, the long-term drivers haven't changed. Let's look at the bigger picture. Even after recent volatility, silver is still up significantly over the past year and remains well above historical levels. That doesn't happen in weak markets. That happens when there is underlying demand. And that demand is being driven by industrial usage, solar, tech, defense, energy transition investments, global supply constraints, and geopolitical fragmentation. So while short-term traders are reacting, long-term capital may be positioning quietly, not aggressively, not visibly, but strategically. The real insight, this is not a normal market because multiple systems are moving at the same time. Geopolitics, war, ceasefire instability, energy markets, oil shocks, supply disruption, monetary policy, Fed decisions, interest rates, global liquidity, tightening versus easing cycles, and silver is sitting at the intersection of all of them. That's why the price looks confusing, because it's not reacting to one thing. It's reacting to everything. Visual moment, final build. Imagine this. It's late Sunday night. Markets are closed. News breaks. Maybe the ceasefire holds. Maybe it collapses. But either way, futures start reacting. Prices begin moving, slow at first, then faster. Liquidity returns. orders fill, momentum builds, and when markets open on Monday, silver is no longer at $74. It's somewhere else, higher or lower, estos, but not here. Final urgency. This is happening right now. This weekend matters. Before Monday, before markets fully react, this decision is forming, and silver is already telling you that. Quietly, final cliffhanger. So here's the real question. Not whether silver will move, but what will trigger it first. Will it be a breakdown in the ceasefire, a spike in oil and inflation, or a shift in Federal Reserve policy? Because whichever happens first will decide the next major move. And by the time most people realize it, the move will already be underway. If you've watched till here, comment below, $78 breakout or $72 pullback. And if you want to stay ahead of moves like this, subscribe now, because the next signal might already be forming.